Alrighty, welcome to my intermediate accounting solution walkthrough. This is for exercise 1621. This is the intermediate accounting textbook. Authors are Don Kiso, Jerry Wanyan, and Terry Warfield. The question used in the presentation is copyright 2019 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. This solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are mine, Bennett Tchaikovsky, and not the authors of the textbook or of Wiley. Okay. Let us have some earnings per share fun. So the first thing we're going to go through and do is we're asked to compute earnings per share for 2020. Assume that the financial statements for 2020 were issued in March 2021. This is going to come into play with the stock dividend, but we'll deal with that momentarily. When I'm looking at my earnings per share, this is going to be our net income minus our preferred dividends divided by the weighted average shares outstanding. So as we look at this over here, what is our net income? Well, the net income is $2,530,000. And when it comes to the preferred dividends, let's just read this through. No cash dividends were declared or paid during 2020. On February 15th, all preferred dividends and arrears were paid together with a 5% stock dividend on common shares. There were no dividends and arrears prior to 2020. So what we are going to do is we are going to subtract out those cumulative preferred dividends because they accumulate. So right over here, we've got 280,000 shares of preferred stock at a $50 par value times 7%. By the way, you would never see this in a publicly traded company situation because you just don't see companies that have preferred stock. If you do see it, it's been zeroed out or it's been retired prior to the companies going public. So we're going to have over here, this is going to be 2.53 million minus 980. So what we now need to figure out is what are the weighted average shares outstanding. Okay, so we have over here, we started with 900,000 shares of common stock. These were outstanding for the entire year, or we're going to put this over here at 12/12, or from 1/1/20 to 12/31/20. Now it says over here on April 1st, 450,000 shares of common stock were sold. Okay, so if it was on April 1st, this is going to be 9/12 or 4/1/20 to 12/31/20. And then lastly, we have common stocks were purchased and held as treasury stock. So when I buy treasury stock, this is going to decrease my number of shares outstanding, but these were they were bought back on March 12th. So right over here, or excuse me, not March 12th, but on October 1st, or 10/1 through 12/31/20. So this is going to be 900,000 times 12/12. This will be 450,000 times 9/12. And this is going to be 110,000 times 3/12. So again, when you're going through and computing the weighted average shares outstanding, the shares that were outstanding for the full year are not the same as the shares that were sold on April 1st, or the same as the treasury stock that was bought back on on October 1st. I'm losing it. Okay. Well, that's the way you get when you do these types of questions. Okay, so right over here, my total, so my shares outstanding, my weighted average shares outstanding is 1.2 million. Now, before I issued the financial statements, I did a 5% stock dividend. So what I'm going to do is I'm going to go ahead over here and multiply this by 1.05. And this is going to give me 1,270,500. So I'm going to adjust this for the stock dividend. So right over here, I'm going to get 1,270,500. Okay. So my weighted average shares outstanding for this is going to be 1,270,500. So my right over here, so my computing my earnings per share, this is going to be 2,530,000 less the 980 divided by 1,270,500. Divide this through, and I'm going to get $1.22, which somehow rhymes from me to you. Okay, let's just go ahead and check it. And that is correct. So I want to thank you for joining me here on this accounting journey of looking at earnings per share. I look forward to seeing you on the next video, and I want to thank Wiley for allowing me to use their questions. Have a great day, and I look forward to seeing you on the next video. Have a great one.